After posting their first monthly losses of the year, the pressure is on Trump and the Fed to get stocks back to all-time highs. Global stocks posted their first monthly losses of the year during May due to escalated trade tensions. Specifically, U.S. stocks fell over 6% after reaching all-time highs during April, and foreign stocks posted similar losses. The global equity pullback began with a tweet from Donald Trump announcing that the existing tariffs of 10% on $200 billion worth of Chinese imports will be increased to 25%. Additionally, the Trump administration started working on new tariffs on the remaining $325 billion worth of Chinese imports. The equity pullback accelerated once the Trump administration blacklisted Huawei. Huawei is a Chinese smartphone giant that is increasing their global market share of mobile handsets. And the blacklist ruling effectively prevented U.S. companies from selling products such as semiconductor chips to Huawei. U.S. semiconductor stocks sold off over 10% on the news. China subsequently retaliated by increasing tariffs on U.S. imports, creating their own list of unreliable entities similar to the blacklisting that the Trump administration did. U.S. interest rates fell sharply during the month, reaching their lowest levels since 2017, as bond investors increased their bets that the negative economic impact of a prolonged trade war between the U.S. and China would cause the Fed to cut rates up to 3 times over the next 12 months, with over an 80% probability of a rate cut prior to August. We believe the pressure is on the Trump administration and the Fed to propel U.S. stocks to new all-time highs. Donald Trump and Xi Jinping are meeting at the G20 summit at the end of June. And if they are somehow able to reach an agreement or a ceasefire, or there's news of constructive talks, we think that presents some upside to global equities from here. The Fed, during their next FOMC meeting, which is scheduled for June 19th, will likely have to either cut rates or signal increased monetary accommodation in the very near future in order to keep stocks at their elevated levels or moving higher. If the Fed continues with stay put rhetoric, or there's any further escalation of trade tensions, we believe there's significant downside in U.S. equities from here, potentially going to the 2,600 or 2,700 levels on the S&P 500.